don't hold trades through an interest rate announcement. I rarely do ever a cold open, but I'm doing one today. I can't stress enough. If you have a trade open and one of those currencies has a Bank of whatever, Bank of Japan, Bank of Canada, Bank of England, and one of those institutions is making an interest rate and making any sort of announcement about their interest rate, do not hold your trade through that interest rate announcement unless you've already moved to break even, right? Unless your first position's already hit your first stop take profit and you have no risk associated. Under normal circumstances, with a trade with risk, don't hold your trade through that announcement. I'll show you why. So, last night, the Bank of Japan. By the way, I'm showing you another calendar, mainly because I can't get my daily FX or my FX book. What's it called? My FX book. Can't get it to show yesterday. Here's a Forex Factory. This one, same information, just a different format. Yesterday, today, by the way, is Wednesday, January the 18th. Yesterday, Tuesday, well, it would have been Wednesday for Japan. So my time is 9 p.m. On Tuesday the 17th. I don't know what time it will be in Japan. Bank of Japan issued its monetary policy statement and its policy rate. They stuck. They did everything that was expected to happen. They kept the rate exactly the same, minus 0.1% interest rate there. However, once their chairman, Kanuta, I think his name is Kanuta, something like that. Once he started speaking, guess what happened? See this candle right here? Let's make it bigger so that we can see it. We can all enjoy it. This is why you should never hold a trade, a swing trade. Now, if you're day trading and you're going to be out anyway, that's fine. But never hold a swing trade through an interest rate announcement. So price closed this. So from me, from my perspective, 4 p.m. yesterday, price closed right here at 89.46. 5 hours later, they made that announcement. Price ran. Let's say that I was short this, right? Let's say I got in right here and I was short and I hadn't hit my first take profit yet. I'm right here. Price ran all the way up. How much is this? From the open up to the top, price ran up 245 pips, 242 pips, and then proceeded to fall right back down. So absolutely would have hit your stop loss. And now price is 8 pips from where it closed yesterday. This is Aussie yen. All right, let's take a look at CAD yen. Do you see a pattern here? Now, some of the other ones weren't quite as drastic. Pound yen still ran up. What did pound yen run up? Pound yen ran up 408 pips. 434 pip range today total. Today's ATR is 217. So twice as much. Literally twice as much as the ATR. 217 doubled is 434. That's correct. Um, this is why we know they're going to happen. We have information stating when these things are going to come out. I've got a document here that tells you which ones to avoid, right? News avoidance rules. Here we go. Move my head out of the way. Desktop only. If it's an if it's an interest rate announcement, avoid all of them, right? For these other ones, you can pick and choose what you're gonna not pick and choose, but you can see which the different ones. But elections and interest rates, 100% across the board, always avoid holding your trade through that announcement. And I can think of no better example than what happened today with the pound. And because of it was the speech, it was the Bank of Japan. It was their policy on their bonds and what they were going to continue doing regarding purchasing of the bonds that did it, right? And then everyone ran to anyway. It doesn't matter why. It doesn't matter why. If they meet expectations, or if they meet expectations and say something weird about the future, or if they don't meet expectations in any situation, you run a high risk of getting stopped out. Now, sometimes you get stopped out and the price goes the other way, right? Just imagine the price had come up here and stayed up here. Well, then we'd be in a different trend. Then we'd be in an uptrend, right? So we'd be out of the trade anyway. But imagine how frustrating it would be to be short the Aussie yen, to be completely stopped out of this trade and be only 8 pips from where you were yesterday, right? 240 pips it ran up and fell back down 232 pips or whatever, right? You get the picture. So I can't stress it enough. One of the bedrock rules of this strategy, swing trading. Find the announcements that are on the horizon and plan your trade accordingly. And if that means exiting your trade the day before for a small loss, better a small loss than a full, complete stop loss for the most frustrating of reasons, because and have it end up right where it started.